Welcome to the big show. It's the Retire Young radio show. If you're a first-time listener, thanks for stopping by. I'm your host, Joshua David, and we are happy to have you with us today. Once again, as always, I have my great friend. He's the genius of this whole operation, Mr. Al Connickson. Al, how the heck are you doing today?
I feel great. I had my cup of coffee, a cream-filled Bismarck. Life is great. Couldn't get any better than
you're
that.
eating healthy, aren't you?
Oh, yeah, that is healthy, isn't it?
And that big gulp you got there today.
Yeah, please don't tell me they're not healthy.
It's always great to be back, helping our Retire Young family make better investing decisions. And Al, we got a lot to cover today. We want to, dissect these financial markets, what's happening, but also different accounts and different things us as investors or average people can utilize or take advantage of in these financial markets. Now, first off, we had some really good moves again this week. We had some good ups, some good downs, and we're going to talk about those ups and downs. They are both good, and the general public just thinks up as good. So we're going to talk about different techniques and concepts that we can participate utilizing these financial markets. So, Al, what's going on? What are some of the catalysts that's driving this market? We've seen all-time highs a few times in the past couple of weeks here. How can we participate?
Yeah, well, the S&P 500 is up for the year, a record high. The NASDAQ is up for the year, record high. The Dow is still down about 1%. But the important thing, I think the interesting thing is that all of those indexes really have been propelled by a group, a small group, and that's pretty much the technology stocks, the FANG stocks that we talk about. And then probably the number one driver in all three indexes has been Apple stock. The Dow is down 1% for the year, yet Apple has contributed almost 1,200 points to the Dow. What does that tell you? Well, that tells you that there are a lot of stocks in the Dow that are maybe negative and certainly haven't gone into positive territory.
And I believe a few just got kicked out of there, too.
A few did get kicked out. There was a kind of a restructuring of the Dow. Amgen was added. Pfizer was taken out. And there was about 3 or 4 different changes there. Yep. But the one change that's going to be, I think, is going to really impact the movement of the Dow is that Apple is going through a 4-for-1 split on August 31st. And Apple had been the number one contributor to the Dow movement. The Dow is a price-weighted index, which means that what they do is they add all of the price of all the components, all 30 components, and then they divide it by what they call a Dow divisor, which is about 1.47445683533097.
That sounds like pi, 3.141597.
Well, that's a little different than pi, but you kind of have the same idea there. But the point is that Apple used to be the biggest, have the biggest impact on the Dow, and that's going to change. It's gone from number one to maybe somewhere between 11 and 15 as far as its impact. So the Dow may have a little harder time catching up to the other indexes. But the point I wanted to make by saying that those indexes have all been really moved by a small handful of stocks, Apple being number one, is that there are a lot of people whose portfolios have not kept up with the indexes, with the move of the markets. In fact, we had last week we had a class here, and one of the students that came in was upset because his account or his portfolio is down between 6 and 10%, depending on the day. And he's upset because these indexes, with the exception of the Dow, have hit all-time highs and kind of continue to do so almost on a daily basis. So, he wants to know what is going on. What's the difference there? He made the decision to be more involved, to have choices that are more beneficial to him, have more control over his assets. And you have to start, if that's of interest to you, you have to start with what's best for you. And for some people, it's just using an advisor. For some people, it's not being in the market at all. But for some people, it's taking control of your own assets. And look, if you're listening to the show, you're listening for a reason, and if that reason is that you think this is something that might be beneficial for you, getting your arms around your own assets, at least understanding the markets, then maybe this is a good time to start. And the way you start is with knowledge. It's like anything else you do, you really have to understand what it is and how it functions, how it works. Same thing with the market. How do the markets function? And what is really important in the way that they function? And what it really comes down to is price. What causes price to move? And what causes it to move up? What causes it to move down? And what causes it to maybe just kind of take a nap for a while, trade sideways? And how you identify that somehow you have to identify it in a way that you can use it to your advantage. So if you're going to buy something, wouldn't you feel better if you had a good chance of knowing that the price would go up after you bought? And if you're going to sell something, wouldn't you feel better, have more confidence if you felt there was a good chance price would go down after you bought? It really doesn't matter what you think or what I think should happen. We can analyze things all, for a year. It doesn't make any difference. What makes a difference is what the market does. So if that's true, then wouldn't it be important to get an education on what does impact prices and then how to find it, how to find out where that impact is going to be felt actually before it is felt? And it's not with a crystal ball. It's not just crossing our fingers and getting lucky or guessing. What we're going to do is teach our students about teach them to use a proven strategy that's designed and fine-tuned over the years to do just that. And what really it gets down to is, again, what moves the price of something, what changes price, and it's simply that relationship between supply and demand. We talk about that every week. And that's a basic concept that can't be argued in any financial market for any product. More demand for something, price goes up. That's buyers in the financial market. More supply of something, which are sellers, price goes down.
Yeah, I mean, it all comes down to as well as just putting those odds in your favor. I mean, there's, like you mentioned earlier, there's no crystal ball in trading and investing. That's for the economists. They can figure that stuff out. What we want to do is put the odds in our favor with low risk, high reward, high probability entry points into these markets, and it comes down to supply and demand. It's where those banks are buying and where those banks are selling, or we call it the smart money, but we want to trade like those banks and institutions, like the smart money, and not against them. And you said a couple other things that I just want to make sure we understand. I mean, we always talk about those C words, choices, but the big one is control, having more control of your financial future, your finances. And Al, you talk a lot about how us as investors can take control of our finances and our portfolios and just different things in the financial markets in these investing classes that you teach right here at the Academy every single week. Al, we have a lot to cover here today. In the next segment, I mean, we've been talking to a lot of people, and a lot of people want to understand how and why the smart money is always creating income. So let's talk about that. Let's talk about the different techniques and concepts that they use that are also available to us, the public. So this is Josh and Al. We will be right back.